What is the Wells Fargo distinction here? How separate are they from Bank of America, JP Morgan, and indeed Citigroup?
Well, they're handcuffed with the Fed asset freeze, which really limits their ability to grow assets. So they have to be selective where to get the best profit or return. For investors, though, Tom, I got to disagree. I mean, Bank of America, it looks like a clean quarter. Everything's firing on all cylinders for the most part. Wells Fargo, you got a bigger delta opportunity if they can improve businesses.
Yes.
With Wells Fargo, the velocity of mortgages, especially refi besides origination, is a big engine for Wells Fargo. And they got another big delta on the card business. They still have a national platform for the consumer. So it's not always who's the best and who's the worst, but who is changing, and that's what investors need to capture. Bank of America is a great company, but this is their first clean quarter, as noted earlier, versus the last few.
So just to be clear, Ken, it sounds like you are more bullish on Wells Fargo from here as an equity investor than Bank of America. Is that correct?
That's correct. So I haven't seen today's results, but essentially when you have turnarounds and you're in kind of like the end of the second quarter, which Wells Fargo is, they're in a position where they can show significant increases in businesses that have underperformed for several years. They got a new management team in place that took several years to, and when you look at playing the banks and playing net interest income, you really should look at Wells Fargo besides a Bank of America. And when you look at quality, the Wells Fargo franchise is not going away. So turnarounds are never pretty, but I'm sure we're going to hear that narrative later today on the call.